Today is January 26, 2022, and this is your Bank of Canada interest rate update. This morning, the Bank of Canada announced that they are going to keep their overnight lending rate unchanged for the first meeting of 2022, and this is going to surprise many. Just before publishing, the markets had predicted approximately an 80% chance that the Bank of Canada was going to increase the prime rate, and they didn't. So let's take a deeper dive into why that is and what the Bank of Canada is saying on a forward-going basis. Well, it really wasn't a question of if the Bank of Canada is going to raise interest rates in 2022, but really when they're going to raise interest rates in 2022. And in today's announcement, they set the stage for future tightening. They're acknowledging that the Canadian economy is performing very well, but there are economic headwinds due to geopolitical issues, of course, Omicron, the progression of the pandemic, and they're taking a wait and see attitude. Also, they're citing inflation, which is the main reason for needing to raise interest rates. They expect it to ease back down as the pandemic ends and a lot of the supply chain constraints ease. I believe that today's Bank of Canada announcement will surprise many. But the reality is it shouldn't. And it was really a prudent move by the Bank of Canada to kick the can down the road, probably targeting a March increase to the prime rate. Because the issue here is that if the Bank of Canada raises their interest rates too soon, and also before the United States does, that can create economic headwind because the Canadian dollar will increase in value and that'll slow down exports to the United States. So I think they're gonna wait and see what happens in the United States. And they're certainly setting the stage for increases in 2022. They're not saying how many, they're saying that they're going to keep on track to bring that inflation level down to their targeted 2% by the end of the year. So the markets, of course, have been hot, anticipating a 1.5% to 2% increase to the prime rate over the next 12 months. I think that is absolutely outlandish and overshot the expectations. I think we need to bring those expectations back down. And the main reason is because if the bank increases rates too aggressively, they risk triggering a recession for the Canadian economy, which would be catastrophic because we have inflation with a stagnant economy. That's what we call stagflation, and that is the worst case scenario for the Bank of Canada. So for the time being, we live to fight another day. If you are in a variable rate mortgage, I think this story is clear. Hold on. If you have any questions or concerns, please let me know. My name is Chris Mulder, Toronto mortgage broker. I'll be in touch again in March.